Okay, so we shall begin on this particular topic called retail sector. So actually this afternoon, very interesting, we actually asked a few questions, okay, on the Telegram. Let me just actually pluck out some of the questions that we actually asked. So the first thing I asked is retail doing well? So I'm sure you can see the response as well. Most of you actually said not doing well, and COVID actually killed them. So that's about 63% of you. So you believe that most of us believe that retail are actually not doing well. Then the next question I ask is, where are you spending your money? Okay, I think most of you are actually having a mix. So, both online as well as offline. I think it really depends on what are the things that we are buying lah. So of course, if we talk about groceries, I think most of you still, going to NTUC and Sheng Siong. But some of you might be already ordering groceries from Redmart or even some of the online platform already. But when it comes to, for example, shoes, t-shirt, and some of the things, we might prefer buying online, especially nowadays online. Sometimes the price can be a lot more competitive, a lot more reasonable and cheaper as well. Okay, so of course, before I start, okay, just to share, again, this is a disclaimer today, but whatever I'm going to share with you is purely for educational purpose only. So please do your own due diligence. Very, very important. So can we all type into the group chat DYODD, DYODD, which stands for do your own due diligence. All right, can we all type in DYODD, do your own due diligence? Very important, this one. Make sure that you do your own homework lah. End of the day. Okay, just give me a minute. Let me open up my Zoom. I just want to make sure that I can see your chat. Okay, fantastic. All right, so what happened is that, right, okay, why we are actually talking about this topic is because I think all of you, we are all familiar with the retail stock, okay, or rather the retail industry. And the reason why is because the retail industry are basically brands that we are familiar with, okay, and most importantly, the place where we actually spend money on. So for example, like your Nike shoes, your Adidas, or, your Foot Locker. Sometimes some people go for Skechers. Then of course, for those people who are doing yoga, you go to this shop called lululemon or lululemon, whatever you call it. Yeah. So these are the places that we actually spend money on, which is really, really interesting. So of course, in Singapore, I just want to share with you, there's actually two kinds of consumer stock. Okay, one on the left, we call it consumer discretionary. On the right-hand side, this company like Sheng Siong and Dairy Farm, we call it consumer defensive. Can anybody share with me what is the difference between consumer discretionary and consumer defensive? What is the main difference? Basically, there's two words that you need to key in. If you can put in these two words, pretty much you can actually sum out the difference. Yes, very, very good. Essential, okay. And of course, some of you say discretionary could be luxury. So it really depends. Like, it might not have to be luxury, but basically, yeah, I think what your man is correct. Like, essential item. One of them is essential. The other one is not essential. Another thing that you might want to look into is basically your needs and your wants. All right. So the one on the right-hand side, your Sheng Siong and the Dairy Farm, is your needs. It means you need to buy your rice, your vegetable, your gloves, you need to buy them. So this is a need. But on the left-hand side, basically, these are your wants. These are things that you can do without, but it's good to have for some of us. Right, so today we're going to focus a little bit more on the left-hand side. We're not going to talk so much on the defensive. Okay, so we are not going to talk about Sheng Siong. Okay, we're not going to talk about Dairy Farm, but rather we want to talk about those that we can choose to buy or things that we can choose not to buy. So over here, we have the definition. Basically, it means that there's companies that sell things that people don't absolutely need, but still want. Like the hourglass, for example, Rolex and whatever, all this. So some of the example that we have over here is like department store, your clothing stores, your computers, electronic stores, home improvement stores, home furnishing stores like IKEA, and of course, online shopping as well. So all this actually all belongs to what we call consumer discretionary. Right, so the thing about consumer discretionary, very interesting, is that it actually moves up and down, okay? Especially when there is a market recession, you realize that this company that is in the consumer discretionary, they can actually drop pretty significant. Yeah, so I think that is why a lot of people, especially I think based on your feedback, you actually mentioned that quite a number of stores are actually not doing well because right now we are in a recession. So when there's a recession, people actually stop buying things, and then this business, they don't actually have more customers and the business drop. And of course we hear in the news that many of these retail stores actually go bankrupt. I think that is why we have this perception that most of the retail out there are pretty much suffering and doing very, very badly. So surprisingly, you can actually see over here, I just want to share with you some of the key headlines. As you can see, retail sales grow for the third consecutive month with boost from e-commerce. So which means that over the past 3 months, okay, in fact, you can see that retail sales actually has been increasing. Okay, it has been increasing. And if you look at a chart on the right-hand side, okay, US retail sales has actually went up. Okay, right now it's actually even higher than before the COVID happened. So we are literally back to normal already in terms of the amount of money that people are actually spending. Okay, it has actually recovered. Of course, for the last 3 months, there is definitely a huge impact, especially from March all the way somewhere to about May, June. And of course, for China, it was earlier because they actually locked down somewhere in January. Okay, but other than that 3 months of lockdown, okay, pretty much once the market opened up, you can see that sales actually went all the way back up. So just recently, you can see retail spending in July actually topped the pre-pandemic level. So basically, just from this, you can see that in terms of how people actually spend, the spending habit and the amount of money people are spending is pretty much back to normal already. I think Mei Ling mentioned people very stressed, so retail therapy. Yeah, I think that is totally true. Okay, that could be also one of the reasons. So I just want to share with you, what are some of the opportunity that you can actually find in this particular retail sector. So as you can see over here, I just want to read this particular thing over here that mentioned, consumers who are laggards in the adoption curve have been forced to change their behavior in this COVID era. And many of the changes are likely to stick due to transactional convenience. So basically what happened is that, right, because of COVID, how we actually purchase things online also change. Okay, do you agree that actually over the past few months, you have done way more online shopping than before? How many of you agree that you have actually done more online transaction or online shopping over the last 3 months as compared to the past? If you have done so, just put in 111. If you have actually done lesser, you put 000. But if you have done more, you put 111. So that includes, buying your delivering of the food and things like that. That is also part of, buying as well. Yeah, some of you probably still didn't buy that much. Okay, you're still pretty much comfortable lah. Okay, but I can see that one of the biggest change, right? Okay, in my own family, is actually my dad lah. Because why? My dad used to be he basically don't shop online. Okay, so one of the biggest concern that he has lah is that he says that when I buy something online, and most of the time he's working so he won't be at home, and then nobody will be there to collect the items. But what happened is that right now he's actually working from home. So he said that, yeah, actually I can buy because most of the time I'll be home. So when my parcel come, I'll be able to actually collect it. And I don't know what happened to him lah. Maybe he's actually kind of addicted to online shopping. But basically over the past 2 months, I think the amount of parcel that came to my house, okay, because of my dad is close to more than 30 lah. Okay, more than 30. So over the past 2 to 3 months, he basically bought more than 30 items. So every couple of days, right, I will see parcel coming, even in the mailbox, every couple of days. So he can still tell me I still have about 5 more products on the way. So he is like, the person that recently just adopted digitally, okay, and of course buying online. So of course, this is a habit that once you actually get sucked into, it is very difficult for them to actually move out of it. In fact, right now he realized that, wow, actually buying online, a lot of things are a lot cheaper as compared to in the past, because he likes to buy electronics item. So in the past, he probably go to Sim Lim Square, or some of the big shopping mall to look for this item. But right now online, okay, number one, you have everything. Number two is actually a lot cheaper. So I think that is where there's actually this opportunity. So the first company, or rather the first case study that I want to share with you is this company called ULTA, Ulta Beauty. Okay, so what happened is that I actually extracted some of the important information shared by the CEO during their recent earnings. Okay, and I just want to share with you like what the CEO of this company actually mentioned about the company, in this recent quarter, and moving forward, what are some of the things that they will actually be looking out for. So as you can see at the top, they say that since the pandemic began, we have seen more than 2 million online transactions from non-members, and that is more than 4 times the number over the same period a year ago. So that is a 400 times increase, okay, in terms of online transaction compared to 1 year ago. So that is a crazy, crazy amount of number. And I would say that, okay, if not for COVID, definitely you won't see this kind of number. And at the bottom, you can see last month, we have announced our decision to permanently close 19 stores this year to strengthen our overall portfolio. In addition, we have slowed new store growth to manage operational risk this year. So pretty much we can see that most of the retail stores, what they are going to do right now is they're going to focus more on e-commerce, okay, more than ever. And not only that, okay, they are actually, slowing down the number of physical retail stores moving forward. So of course, for the CEO, they did mention that they will still expand the physical stores because, that is where people will still get to see the stores and some of the product, for example, what they do is they actually provide hair cutting services and all that. So all that, you still need to have physical space, but they actually mentioned that they're going to scale down. So probably not going to expand so much on that, but going to focus more on the e-commerce segment of the whole business. So just to share with all of you, okay, in case you are not familiar with this particular company, so what they do is they basically deal with mainly the female product lah. So like your makeup, your eyeliner and all that. Okay, so these are some of the brands that they actually have. So if you have heard of this before, right, can you just put in ULTA? If you have heard of this company before, can you just type in ULTA? I'm not sure if Singapore, we are familiar with it, but I think in US, they are pretty big lah. They have, I think, more than 1,000 over stores worldwide. Okay, so we do have quite a few of you actually who have seen this before. Okay, that's good. So also moving forward, right, what are some of the strategies that the CEO actually mentioned is they say that they will continue to expand on the e-commerce channel, all right? And also in terms of how they actually operate in terms of the sales staff, they actually mentioned that we're going to focus on providing better service through online as well as store engagement. So one of the biggest change is that they're going to actually remove this particular position called a store manager, and instead they are going to replace it by this, I think if I'm not wrong, it's called like customer service or client satisfactory officer, something like that. So you realize that they are not looking for people to manage the store, but rather they are looking for people, okay, that is more client centric, focusing more on the service, so when you go to the store, their job is to make sure that you actually get the best experience out of it. And I think moving forward, that should be the way. When it comes to physical stores, it is all about experience. All right. And then if you like it, if you like the way, they actually serve you, then if you want to buy the product, subsequently, you can actually buy online. It will just deliver direct to your place. You don't even have to go down to actually, refill or refill some of the things that you are actually using. So of course, the third point also very interesting. They say that they are going to renegotiate for better rental for both existing stores and new openings. So definitely, I think right now there are a lot of stores that actually didn't do well. Okay, and as a result, they actually have to close down. So I think this is also a good opportunity for those stores that are actually doing relatively okay to actually negotiate with the landlord to ask them to give them a better deal moving forward. And I think as a landlord, you don't really have much choice because right now, you probably want to secure, the tenant as well. So this is actually one of the strategies that they're actually doing moving forward to actually cut costs as well. So I just want to share with you the financial. I'm just going to focus on namely the earnings per share, which is telling you how much profit they are actually making. So if you look from the left to the right, it's telling you from 2011 all the way to 2020. And then TTM is basically based on the latest quarter. So that is the most updated figure. So we can see that this company, they actually have been doing pretty good. In fact, they are doing extremely well. from 1.16 to about 10.94. That's about 1,000% growth over the last 8 years. But of course, because of COVID, because they actually shut down for a couple of months, so sales definitely has dropped, but they are actually still in the profit zone. They're actually still in the profit zone. All right, so this is basically the financial of this particular company. So as you can see over here, these are the recent quarter results just released, I think yesterday, yeah, 27th of August. Okay, so I actually summarize it for you. So overall sales are lower, okay, compared to a year ago due to reopening and of course the crowd control in stores. You can't have so many customers within the stores. Thing to think though is that e-commerce sales actually increased by more than 200%. And I think the last one is, okay, a lot of business are actually not doing well, but for them, they are actually still profitable and they have a profitable quarter of 41.5 million, which means that over the last 3 months, okay, they are actually still profitable. Although I think out of the 3 months, probably they're only open, for 1 month. That means the first 2 months, they're actually still closed. But they actually managed to stay profitable, partly because of the e-commerce side, as well as, once the market open, people actually start coming back as well. So there is the first case study. As you can see, they're actually doing pretty okay. And I think moving forward, okay, as they continue to put more focus onto the e-commerce side, I think they will actually be able to do even better than before. So this is a company that I believe will continue to grow even better, to grow even bigger and to continue to expand as well. That is for Alta. The next company I just want to share with you is this company called jcpenney. Okay, and this is of course the opposite of Alta. This is a company that actually has went bankrupt. All right, and of course, there is actually these two property group, Simon Property as well as Brookfield Property. They are actually looking to actually buy over the brand. So some of you might be wondering, hey, how come I still see jcpenney, over there? It's because they actually, in a way, changed owner. Okay, so they went bankrupt and somebody actually bought over the branding and everything. So one thing I just want to share with you based on this particular case study is that, right, you realize that, even without the COVID-19, let's take a look at the earnings per share of jcpenney. You can see what happened is that, 2012, they were losing money. 2013, they were losing money. 14, losing money. 15, losing money. 16, losing money. 2017, 2018, 2019, 2020, every single year, they were actually losing money. So I would say that, the COVID-19 is basically just the final strike to actually make them, go bankrupt. So when you actually look at, some of the news, they actually say that, retail is going bankrupt and things like that. Actually, if you look at the financial, it will actually give you a better picture, because this is a company that in the first place, whether or not there's a COVID, whether or not there's a recession, they are already doing pretty badly. So there's already an issue with the business. So that is jcpenney, just to share with all of you. And of course, another company that I think we are all familiar with is GNC. Okay, GNC. How many of you have actually bought product from GNC? Or can you just type in GNC if you have bought their product before? GNC. Okay, Sharon have bought. Okay, Chill as well. Wow, okay. Suddenly everybody, more and more people actually bought GNC. Yep, same for me. I think the last time I bought GNC was about maybe when I was in poly. Okay, yeah. Basically, I bought their protein, whey protein, last time people like to buy all the protein, very, very big container. Yeah, I used to be one of them. So yeah, GNC. Again, you can see that GNC is another company that has went bankrupt. So I just want to share with you some of the similarities with between GNC as well as jcpenney. So GNC is slightly better. As you can see, 2010 all the way to 2015, they're actually profitable. All right. But then in 2016, they start to turn negative, and then they have pretty much been negative for most of the years after 2016. So once again, okay, the lockdown and the COVID-19 is just, a direct impact to actually force them to actually go into bankruptcy. And of course, same thing, they are actually being bought over by a China company. So you might still see this brand, okay, but it's actually by a new owner instead of the previous GNC owner already. So all these are listed companies, just to share with you as well. Okay, so of course, just now we talk about one relatively good company, then we share with you two not so good company. Okay, probably you don't even want to invest in them. Okay, the next company that I want to share with you is again a pretty decent one, So this is Lululemon or Lululemon. Can anybody who are familiar with the name, can you tell me whether is it the first one, Lululemon, or the second one, Lululemon? One or two. Okay, so Sharon say one. Oh, so Ming Chen, you also know. Do you buy the product, Ming Chen? Lululemon. Okay, so you are right. So it's pronounced as Lululemon. Interesting. Yeah, so what do they sell? Basically, if you look at the left-hand side, you can see some yoga mat. Okay, and of course, you can see some yoga pants. So on the right-hand side, there's a lady in the yoga pants as well. So yeah, what they are selling is basically sportswear. Sportswear. Very, very expensive and branded sportswear. So I just want to share with you the financial of this particular company, Lululemon Athletica. Can you see from 2011 to 2020, this company has been growing and growing. And even, with the COVID-19, you can see that their sales actually didn't drop a lot. They are actually still doing pretty well. Okay, partly of the reason why is because, now everybody is working from home. So, more people are actually exercising at home, and actually, when they're at home in front of their camera, they want to look good, they want to feel good, because what people can see is basically, what brand you're wearing. I don't know, but basically, more people are exercising from home. Okay, so as a result of that, I think more people are actually buying the comfortable attire, to actually exercise at home. Canadian company, I'm not too sure. Yeah, but y'all can actually go and check it out. Okay, whether is it, which country are they from? Yeah, but they're actually doing very, very well. So maybe we can hear from some of you, anybody who actually use their product one. Can you just unmute yourself if you are using the product and just say hi? We just want to hear a little bit of the real life.
I bought Lululemon pants for my husband and son when I was in Canada. Very expensive though.
Oh, okay. So are they still
not for
using
myself,
it?
yeah.
Are they still using it?
When I got back, they're supposed to alter it, then went into COVID, so the pants is unaltered and unused yet.
Okay. So they have not used it yet lah. Okay. So what about yourself? You didn't buy yourself?
No, I didn't buy for myself.
Okay. So not considered a user yet lah. Okay. Anybody else? Any user of Lululemon? Can you just unmute yourself, and we just want to hear a little bit of customer feedback from a Lululemon supporter. Anyone? Just now I see some of you. Okay, let me just arrow one of you. Eileen, can you unmute yourself? We just want to hear a little bit of your review. Eileen, are you here? Eileen on.
Okay. Yes, I'm
don't
here.
Don't worry.
I actually don't use Lululemon, but a lot of my yoga friends, they love it because they say it's very comfortable. Once you wear it, you wouldn't want to wear the other brands.
Oh, okay. So your friends have been all using it lah. But
yes, it's very popular. I didn't.
You didn't. You didn't follow. But do you feel like you also want to buy one if given a chance?
I think I will.
You think you will lah, but haven't buy yet lah.
Yes.
Okay. Oh, wow. Okay, thanks for the review. Yeah, so this is basically what I hear lah. So the quality is very, very good, and they're very, very comfortable, and people say that they can actually last for quite a number of years lah. So in terms of the quality and the price, but if you can use it for a long period of time, then they say it's actually worth it. And it is very sticky. So once you stick to it, you don't want to even look at any other brands. So that's why that they're actually doing extremely well. So I just want to share with you again, this is something that is being shared by the CEO of Lululemon. Surprisingly, it's actually a man. Okay, if I'm not wrong, based on the name, it sounds like a man. Okay, but what the CEO actually mentioned is that, a new normal has emerged, and we were encouraged to see how quickly our guests were embracing both working and sweating from home. We saw a significant acceleration in sales trend that resulted in 125% e-commerce comparative for the month of April, with this momentum continuing into the second quarter. So once again, you can see that the e-commerce business is doing extremely well. Okay, triple digit increase. Okay, triple digit increase. And in terms of our digital channel, e-commerce contributed, okay, approximately 352 million, or 54% of the total revenue. What I'm interested here is actually 54% of the business actually comes from e-commerce. All right. So I just want to ask you a very simple question. Comparing, physical stores and e-commerce, which model do you think has a higher profit margin? The first one being the physical stores, the second one being e-commerce. Which one has a higher profit margin? Okay, pretty much it's going to be number 2, right? Of course, yes, you need to do the delivery and all that, that kind of thing. But, having a physical store is definitely a lot more expensive, like because of rental, because you need to have people, managing the stores. And, what happens if there is another lockdown? Which later I'm going to share what happens if there's another lockdown. E-commerce doesn't matter because, business still goes on as per normal. But if let's say you have a physical stores, you are going to be highly affected. So that is why same thing, the CEO of Lululemon also mentioned that they will actually be focusing a lot more on the e-commerce segment. So this is an area whereby they will continue to do even more. In fact, they are already doing extremely well in the e-commerce. And that is why, just now, if you look at their earnings per share, even during the COVID, they are actually still doing pretty decent because, half of their business actually comes from online, which is not really that much affected. And some of the future plan that they actually mentioned, okay, as you can see, is that we are prioritizing spending on digital and omni initiative and fulfilling capabilities or pulling back somewhat a new store opening and remodel. So pretty much the same as Alta, whereby they are actually going to spend more on digital capabilities, okay, and they are going to cut down on their new store opening. So that is probably going to be the trend moving forward for most of the retail stores. Okay, yeah, so that is something for us to actually take note lah. So I just want to add on, okay, what are some of the potential risks moving forward when it comes to investing in this kind of retail store? Okay, the first one is definitely very obvious lah, the risk of a second or even the third lockdown, depending on which country. So I think US only had one lockdown. Okay, the second lockdown didn't happen. Hopefully not, because the impact is going to be really big. And one of the reasons why also the US, I would say the retail sales actually went up is because a lot of people are actually getting government grants. Okay, so even if let's say you are totally unemployed, you know that previously they were getting $600 every week. So that's like $2,400 every single month, even when you're not working. And I think like almost, I don't know, more than 10% of the US citizens are actually getting that $2,000 over every single month. So they actually, so literally they can still buy. In fact, what I hear from another place is that the average income, okay, of the US actually went up. The average income actually went up because of the government benefits, the unemployment benefits. So what happened is that the unemployment benefits actually stopped based on end of last month, which is 31st July. So that the $600 basically has already stopped. But what happened is that, okay, Donald Trump, he actually has this emergency rule whereby he actually put in a $400 or $300 every week. So right now they are actually getting a reduced amount of $300 every single week. Okay, of course right now they are still negotiating okay, to see what are some of the new employment benefits that they want to actually churn out. But right now, they are actually collecting $300. And what happened if let's say they decided to stop? So that would actually have a direct impact. But based on what we know, okay, and of course yesterday we also mentioned that the election is coming in November. So pretty much if you're Donald Trump, you will do anything to make the stock market goes higher. And one of the easiest way is to give, money to the people so that the people can actually spend money to boost the economy. And also they can also put the money back into the stock market by investing into, company like Tesla and Apple and all that. So, I believe that the government will continue to actually come up with more money to actually distribute to the citizen. Okay, and then the citizen will actually pump the money back into the economy by either spending or through the stock market, etc., etc. So this one until November, okay, is pretty clear cut. But after November, what is going to happen after the next person take over, whether is it Donald Trump, okay, or some other people, okay, that is uncertain. Okay, so at least for now, I still find that we are pretty safe. Okay, so any questions so far? Any questions so far? If everything is good, can you just put in okay? If everything is good, can you just put in okay? Okay, fantastic. So what happened is that I actually have some bonus for you. So again, today, right, is purely just educational. I don't want to be, sharing overly too much on certain company, but I just want to give you a better understanding of the retail sector. But this is something bonus that I just want to share with you is that two companies that I'll be actually looking out for. Okay, I'll be looking at is this company called Foot Locker as well as Skechers. So this is, again, I think we all can see them in our Singapore shopping mall. They are actually in Singapore as well, okay, in our retail scene. So some of the few things that I'll be looking at, okay, is that number one, are this company in the online space or not? Are they actually selling their product online? The second question I'll ask myself is, are they actually still growing their presence? Okay, that means they're actually doing, more things lah. Actually, they're like, for example, Nike like to look for all the sports person to actually take their brand and be their ambassador and things like that. Okay, so same thing, I want to see if are they still actually doing something about the brand. Okay, maybe partnership or collaboration or things like that. Are they growing their stores in Singapore as well? So these are some of the things that I'll be looking out for. If let's say you see that they have been shutting down their stores, then you'll be concerned about it. Of course, the third one is, most importantly, are people actually buying them or not? Are people actually going to the stores or not? So this is what I found, okay, for these two companies. So first of all, if you go to Foot Locker website and if you go to Skechers website, pretty much the moment you go to the website, it seems like a shopping website lah. It seems to me like a Shopify website. Straight away they tell you to buy already. Straight away they give you discount and ask you what you want to purchase and things like that. So I think they are pretty much already in line. Okay, definitely I would say that they are already in the e-commerce segment. They are already it means it's being set up lah. So compare, you go to Sheng Siong website, okay, you don't see their website selling vegetable lah. So if you go to NTUC, again, you don't really find them, so straightforward. But if you look at all these websites, Skechers, Foot Locker, immediately it is a shopping website. Yeah, so you go in, immediately they ask you to shop. They don't even want you to know what is this company doing. They just want you to buy. So the next thing is, are they actually growing their presence in Singapore or maybe some of other places or not? So if you look at the left-hand side, Foot Locker Singapore actually launches its largest store on on Orchard. In fact, this was actually very, very recent, just a few days back, August 17, about 1 week ago. So they actually opened this very big store in Orchard Road, Orchard Gateway. This is a 5-story retail shop, okay? A 5-story retail shop. And of course, on the right-hand side, Skechers is collaborating with Sailor Moon. Okay, one of my favorite cartoon. Okay lah, is it cartoon? Yeah, one of my favorite lah. But anyway, you can see it's actually pretty cute. And I think for young girls and young girls lah, they would actually love it. It's very colorful and the pattern and all that. So yeah, I'm not sure about you. Do you all like the Sailor Moon and the Skechers collaboration? If let's say you are parents with kids, do you think your kids will actually love it or not? Can we have some feedback? You can put into the chat group lah. What do you think about the Sailor Moon collection? Okay, question mark. Okay, some of you maybe don't even know what is Sailor Moon. Kids too old to like Sailor Moon. Yeah, I think it's maybe more for my age lah. All right. Okay, but anyway, yeah, that is just something that I found interesting. Okay, and of course for the last one, okay, the last one is actually, are people actually buying them or not? So this photo, okay, very interestingly, my friend actually sent it into the group chat about a few minutes ago, about half an hour ago. So I think she was out shopping and then she just took this photo because it was so crowded. Okay, and then it happened to be the company that I'm looking out for lah. So I think this, I don't know where is this place, but this is what she shared. This should be one of the hottest store right now. Okay, and of course you can see the crowd. The crowd is crazy. So that people are actually buying from Foot Locker. I have a lot of friends who actually buy shoes. They actually collect shoes like Adidas, Nike, and all that. So this is also a brand that they actually love a lot, Foot Locker. And of course, for Skechers, I don't have the photo of a crowded Skechers shop, but you know, every time I go to an outlet mall or I actually go to Skechers, I do see people actually going in. Okay, I do see people actually, it is actually one of the stores that will be relatively crowded. It's actually one of the stores that is relatively crowded, and that is for Skechers. So yep, basically I think this two company actually caught my eye, and of course in terms of the valuation, they are actually not that expensive right now, but I think disclaimer, I am actually not buying them right now. I don't think right now is the time to buy them, okay, but I will actually be monitoring them for now. So this is just to share with you. So if you want to know when I'll be going into these two company, then you have to actually watch out for our Telegram channel. So if I'm going in, I will let you all know. Okay, let me just mute some of you. Yes. So yeah, basically that's all for my sharing in terms of retail. Later, I will actually answer some of your questions. Okay, so just to do a quick sharing. Okay, tomorrow we have another special session, which is on the crisis income formula webinar. So if you have not attended this, okay, then please join us tomorrow, 2 p.m. to 4 p.m. If you have already attended, then don't need to attend anymore. Okay, so basically I'll be sharing more about you know, how to invest in the US market, what is option and things like that. So that will happen tomorrow, 2 p.m. to 4 p.m. So right now I'm going to take on some question. I think some of you have actually questions. So Yip, the first question is, with this trend, what is your view on REIT? Okay, what is my view on REIT? Actually, I think y'all can also see by now is that there are, especially some of the shopping mall, okay, there are actually a lot of changes. Like there's a lot of stores that is actually coming out. There's also some stores that is actually new, okay. So I think location is still very, very important. So especially when it comes to, for example, CapitaLand, even though the market is going to be challenging, but one good thing about CapitaLand is that they actually have a very, very strong backlog. Okay, that means there are always people, there are always stores that is looking to actually put their brand in a CapitaLand shop or shopping mall. Okay, and that is why for me, I feel that CapitaLand, okay, or Capital Mall is actually a very, very strong REIT. But one of the problem right now is that the prices of the REIT are not coming down. Okay, so they are still pretty expensive and the dividend yield to me is not attractive at all. Okay, and that is why I have been pretty much avoiding REIT. I have not actually entered REIT for my portfolio right now. So that is the reason why. But I do see that if you want to go in for the stronger one, especially data center. I think, for example, Mapletree, they are actually very focused into data center because that is something that is upcoming. You know, moving forward, a lot of companies are going to expand their data center, and that one is like a constant or rather a stable stream of income. You know, once you set up your data center, right, you're not going to move. Pretty much for the next 10, 20, 30 years is a very, very stable and recurring income for the REIT owner. All right, so that's my personal view on REIT. Second question, will there be a correction in the US market come September and October? Okay, so yesterday I did share, but today maybe I just add on a little bit. So I do believe that from now until somewhere in late October, November, until election period, the market should be bullish. Okay, market should continue to go higher.